Trading changes the moment you stop trying to force the market to entertain you. Most traders don't understand this at first. They think the goal is to always be involved, always watching, always reacting, always catching every move. They think successful traders are glued to the charts all day, making decision after decision after decision. But when you actually meet experienced traders, the reality feels almost disappointing. Most of the time, they do nothing. They sit there quietly, calmly, almost detached from the chaos happening on the screen. And beginners look at that and think, how are they making money if they barely trade? What they don't realize is that professionals are not paid for activity. They're paid for accuracy. One clean trade taken at the right moment can outperform 50 emotional trades taken out of boredom. But boredom is exactly what destroys most people. Human beings hate silence. We hate waiting because waiting feels unproductive. It feels like nothing is happening. And when nothing feels like it's happening, the brain starts searching for stimulation. That's when traders begin manufacturing opportunities that were never there. They start convincing themselves weak setups are strong enough. They start lowering standards. They start negotiating with their own rules. It's close enough. Maybe this will work. I'll just enter small. And usually, the moment those words appear in your mind, danger has already begun. Because real setups rarely require emotional convincing.
The best trades often feel obvious after enough experience. Calm, structured, clean. There's no chaos inside you when you see them. There's clarity. But emotional trades always feel rushed, heavy, uncomfortable. You feel pressure before entering. You feel fear after entering. You keep checking price every few seconds because deep down you already know the trade wasn't truly aligned with your plan. That's why emotional trading becomes exhausting. Not because the market is difficult, but because inner conflict drains enormous energy. Your mind is constantly fighting itself. One part wants discipline. The other part wants stimulation. One part says wait. The other says enter now before it's too late. And whichever voice wins consistently determines the future of your account. I remember a period where I couldn't stop clicking. Even when I promised myself I would wait for clean setups, I still found ways to enter mediocre trades. It was almost automatic. The market would move quickly, and suddenly my entire body would tense up like I was missing some once-in-a-lifetime opportunity. My heartbeat would speed up, my attention narrowed, logic disappeared. All I wanted was to be inside the move. And sometimes, the worst part was, sometimes those bad trades actually worked. That's what makes emotional trading so dangerous. Bad habits occasionally get rewarded. And when they do, the brain becomes even more addicted to impulsive behavior. You begin believing your emotions are intuition. You start trusting urgency instead of structure. But eventually, the market collects payment for all emotional decisions. It always does. Maybe not today, maybe not tomorrow, but eventually.
Excitement feels powerful in the moment, but discipline quietly builds survival. Excitement makes you overtrade. Discipline makes you selective. Excitement makes you chase candles. Discipline makes you wait for confirmation. Excitement wants immediate action. Discipline understands that opportunity is meaningless without alignment. That's the shift that changes traders forever. The moment they stop asking, how many trades can I take? And start asking, which trades are actually worthy of my capital? Because capital is not just money, it's emotional energy too. Every bad trade damages both. Every impulsive decision weakens confidence slightly. Every revenge trade clouds judgment further. Until eventually, the trader no longer trusts themselves, even when a real setup finally appears. And that's one of the cruelest ironies in trading. By wasting yourself on low-quality trades, you become emotionally unavailable for the high-quality ones. The market finally presents the opportunity you've been waiting for, and now you're too damaged to execute it properly. Either your confidence is gone, your focus is gone, or your discipline is gone. That's why patience is not passive. Patience is preservation. It preserves clarity. It preserves confidence. It preserves capital. And most importantly, it preserves your ability to act decisively when the right moment finally comes.
There's a moment that almost every trader experiences, but very few ever talk about honestly. It usually happens late at night. The charts are still open, your room is quiet. Maybe you already lost money that day. Maybe you overtraded again. Maybe you took a setup you promised yourself you wouldn't touch. And now you're staring at the screen, asking yourself a painful question. Why do I keep doing this to myself? Not because you don't understand trading, not because you're stupid, but because in that moment, you realize knowledge alone isn't enough. You can study patterns for years. You can memorize indicators. You can learn risk management perfectly and still lose. Because the market doesn't simply test your strategy. It tests your character. It tests whether you can stay calm while uncertainty crushes your emotions. It tests whether you can follow rules when your instincts scream at you to break them. It tests whether you can stay patient while opportunity feels like it's slipping away. And most people fail that test long before they fail technically. That's why trading becomes deeply personal after enough time. At first, it feels like numbers and charts, but eventually it becomes a mirror. Every weakness inside you slowly appears on the screen. If you're impatient in life, you'll be impatient in trading. If you constantly seek excitement, you'll overtrade. If you struggle with discipline outside the market, you'll struggle inside the market too. The charts expose everything, and that realization can either destroy you or transform you. Because once you understand this, you stop trying to fight the market itself. You start working on yourself instead. You begin realizing that becoming profitable isn't only about finding better setups. It's about becoming emotionally stable enough to execute properly. That's the part social media never shows. People love posting winning trades, big profits, fast cars, lifestyle clips. But nobody shows the real work, the hours of sitting still, the days without trading, the emotional battles behind the scenes, the discipline required to do absolutely nothing while the market moves without you. Because honestly, doing nothing is one of the hardest things in trading. Human beings are wired for action. We want to feel progress. We want movement. We want evidence that we're getting somewhere. And when the market becomes slow or unclear, the brain starts panicking. It wants stimulation again. That's why traders chase mediocre setups. They don't want to feel left behind. But here's the irony. The more desperate you are to make money quickly, the harder it becomes to trade well. Because desperation destroys clarity. A desperate trader sees opportunity everywhere. A calm trader sees opportunity rarely. And that difference changes everything. The desperate trader cannot wait. They feel emotional pressure every time price moves. They jump into trades before confirmation. They enter because they're afraid of missing out. Then the moment they're inside, fear changes direction. Now they fear losing. So they close early, or move stops emotionally, or panic during normal pullbacks. Their entire trading experience becomes emotional chaos from beginning to end. But the calm trader operates differently. They understand something most people learn too late. Missing trades is normal. Missing trades is healthy. Missing trades is part of the game. Because not every move belongs to you. That idea changed my entire perspective on trading. I used to think every move I missed was lost money. I used to stare at charts feeling frustrated every time price ran without me. But eventually, I realized something important. If a move didn't match my plan, it was never mine to begin with. And once you truly understand that, emotional pressure starts disappearing. You stop chasing every candle. You stop feeling emotionally dragged around by market movement. You stop needing to participate constantly just to feel like a trader. Instead, you become selective, patient, intentional. The market has a very strange way of teaching lessons. It rarely teaches them gently. Most of the time, it teaches through pain, repeated pain. The kind of pain that slowly forces you to change, whether you want to or not. And one of the hardest lessons every trader eventually learns is this. The market does not care how badly you want something. It doesn't care if you need to recover losses. It doesn't care if you're behind on your goals. It doesn't care if you spent the whole week waiting for a move. The market moves when it moves, not when you emotionally need it to. That realization can feel brutal at first because it destroys the illusion of control. Beginners constantly try to force control onto the market. They try predicting every movement. They try catching every breakout. They try turning uncertainty into certainty. But trading never becomes certain, ever. Even the best setups can fail. Even perfect analysis can lose. And once you truly accept that, something inside you relaxes. You stop trying to control outcomes. You start focusing on controlling behavior instead. That shift is massive, because suddenly your success no longer depends on being right every time. It depends on whether you followed your process correctly. That's how professionals think. They understand they cannot control results. They can only control execution. And execution is emotional discipline repeated consistently over time. Nothing glamorous about it. No adrenaline. No dramatic excitement. Just consistency. That's why real trading often looks boring from the outside. Most profitable traders are not emotional geniuses predicting every move. They're simply people who became extremely good at avoiding unnecessary mistakes. That's the hidden secret nobody wants to hear, because it sounds too simple. People want complexity. They want secret indicators, hidden systems, magic confirmations. But many accounts would improve dramatically if traders simply stopped taking emotional trades.
Think about that honestly. Imagine deleting every impulsive trade you took over the last few months. Every revenge trade, every FOMO entry, every boredom trade, every "this looks close enough" setup. What would happen to your account? For many traders, the difference would be shocking. Because often the problem isn't lack of winning trades, it's the endless pile of unnecessary losses draining everything away. And those unnecessary losses create emotional damage far beyond money. They damage confidence, focus, discipline, self-trust. After enough emotional trading, traders become mentally exhausted. Even when good opportunities appear, they hesitate. They doubt themselves. They execute poorly. Because emotional mistakes leave psychological scars. That's why protecting your mindset matters just as much as protecting your capital. In fact, they are connected. A damaged mindset usually leads to damaged decisions, and damaged decisions eventually damage accounts. This is why experienced traders become obsessed with emotional neutrality. They don't want to feel euphoric after wins or destroyed after losses. They aim for stability, calmness, balance. Because emotional extremes are dangerous in both directions. Overconfidence after winning can be just as destructive as desperation after losing. Both pull you away from objectivity, and objectivity is where good trading lives. The moment emotions become too strong, clarity disappears. That's why professionals create rules before entering trades. Rules protect them from themselves, because in emotional moments, human beings become irrational very quickly. Fear changes perception. Greed changes perception. Hope changes perception. Suddenly, traders start seeing what they want to see instead of what's actually there. But rules create structure during emotional chaos. Rules force patience when emotions demand urgency. Rules prevent destruction during moments of weakness. And eventually, after enough experience, discipline stops feeling restrictive. It starts feeling freeing. Because now you no longer need to constantly think emotionally during trades. The process.
Most traders never realize how much damage emotional noise creates inside their minds. They think the problem is losing money, but often the real damage happens long before the loss itself. It starts the moment they become emotionally attached to movement, the moment every candle begins feeling personal, the moment their mood starts rising and falling with every tiny fluctuation in price. That's when trading quietly becomes unhealthy. Because now the market is controlling your emotions instead of you controlling your behavior. And once that happens, clarity disappears fast. You start waking up thinking about trades. You check charts constantly throughout the day. Your attention becomes fragmented. Your peace disappears. Even when you're away from the market mentally, part of your brain is still trapped inside it, watching, anticipating, hoping. That's not focus anymore. That's emotional dependency. And emotional dependency is extremely dangerous in trading because dependency creates desperation. When you emotionally need the market to give you something, patience becomes almost impossible. Every movement starts feeling meaningful simply because your brain wants stimulation. That's why traders begin overanalyzing charts after staring too long. The longer emotional traders sit in front of screens, the more setups they magically find. Not because the market changed, but because their emotional need for action increased. A calm mind sees clearly. A restless mind sees opportunities everywhere. That's why stepping away from charts is sometimes more productive than staring harder. Distance creates objectivity. Emotional attachment destroys it. I learned this the hard way after spending months trapped in a cycle of constant monitoring. Every morning I woke up immediately checking futures. Every small movement affected my emotions before the day even started. If price moved without me, frustration appeared instantly. If I caught a trade,
Because outcomes are never fully controllable. Some days great trades lose. Some days bad trades win. That randomness destroys emotionally attached traders because they interpret every outcome personally. But mature traders separate identity from results. A losing trade does not mean they are failures. A winning trade does not make them geniuses. It's simply probability playing out over time. That emotional separation is what allows professionals to remain stable, while beginners constantly swing between euphoria and despair. And stability matters far more than excitement. You know what most beginners secretly want? They want trading to feel exciting all the time. Fast movement, big wins, emotional highs. But excitement is usually a warning sign. The more emotional a trade feels, the more dangerous it often becomes. Real professionals don't chase emotional highs from trading. In fact, many profitable traders describe their best trades as almost boring. Calm entries, calm execution, calm exits. No drama, no emotional chaos, just process. That's because emotional calmness creates precision. When your mind is quiet, decision-making improves dramatically. You stop rushing, you stop forcing, you stop reacting impulsively to every movement. And most importantly, you stop needing the market to constantly entertain you. That's when patience becomes natural instead of painful. Because now you understand that your value as a trader is not measured by how active you are. It's measured by the quality of your decisions. One clean decision can outperform 100 emotional ones. One moment of discipline can save weeks of recovery. One skipped bad trade can protect both your capital and your confidence. That's why experienced traders. There's something almost nobody understands when they first enter trading. The goal is not to become fearless. Fear never completely disappears. Even experienced traders feel uncertainty. Even professionals feel pressure before large positions. The difference is not the absence of emotion. The difference is emotional control. Beginners think confidence comes from winning, but real confidence comes from preparation. It comes from knowing exactly why you're entering, exactly where you're wrong, and exactly what conditions need to exist before you even touch the market. That kind of clarity creates calmness. Emotional traders don't have that clarity. They enter based on impulse, excitement, or fear of missing out. Then, after entering, they begin mentally negotiating with themselves. Maybe I should hold longer. Maybe I should close now. Maybe I moved too early. Their minds become battlefields because the trade was never fully planned to begin with. And uncertainty inside the trader creates instability inside the trade. That's why preparation matters so much more than prediction. Most traders obsess over trying to predict where price will go next, but professionals focus more on preparing for multiple outcomes. They know they can be wrong. They expect uncertainty. And because they expect uncertainty, they don't emotionally collapse when the market behaves differently than expected.
That emotional flexibility is powerful. It keeps them stable while others panic. Think about how many traders are emotionally destroyed simply because the market didn't do what they hoped. Hope becomes dangerous when it replaces structure. The moment a trader starts hoping instead of following a plan, discipline starts dying. Hope keeps people inside bad trades. Hope convinces traders to move stops further away. Hope tells them the market will come back. But markets are not driven by hope. They move according to supply, demand, liquidity, momentum, fear, greed, and countless forces beyond individual control. That's why emotionally mature traders respect uncertainty instead of fighting it. They understand that survival matters more than ego, and survival requires flexibility. One of the biggest mindset shifts in trading happens when you stop trying to prove.
They know being wrong is normal. Their identity is not connected to individual trades. If conditions invalidate the setup, they simply exit and move on. No drama, no emotional breakdown, no desperate need to get it back. That emotional detachment allows them to stay mentally clear for the next opportunity. And that matters more than most people realize. Because trading is cumulative psychology. Every emotional mistake affects the next decision. A frustrated trader sees charts differently than a calm trader. A desperate trader manages risk differently than a patient trader. Emotional states constantly shape perception. That's why protecting your psychology is not optional in this game. It's survival. The market is one of the few environments where emotional weakness gets punished financially in real time. Impatience costs money. Revenge costs money. Ego costs money. Lack of discipline costs money. And over time, the market exposes every emotional crack inside a person. But if you're willing to learn from those painful moments instead of running from them, trading can also transform you. Because eventually you begin realizing the market was never your biggest enemy. Your impulses were. Your need for action. Your inability to wait. Your emotional reactions. Your attachment to outcomes. Those were the real battles all along. And the traders who finally become consistent are usually not the smartest people in the room. They are simply the ones who learned how to stay emotionally balanced while others kept sabotaging themselves.
At some point, every serious trader reaches a crossroads. One path leads deeper into emotional chaos. The other leads toward discipline. And the terrifying thing is that both paths often look identical in the beginning. Both traders study charts. Both traders learn strategies. Both traders watch the same markets. But over time, their psychology pulls them in completely different directions. One trader keeps chasing movement, keeps forcing trades, keeps reacting emotionally to every candle. The other slowly learns to slow down, to breathe, to observe without urgency, to stop treating every market movement like an emergency. And that small difference compounds massively over time. Because emotional reactions accumulate, so does discipline. Every impulsive trade strengthens impulsive habits. Every patient decision strengthens emotional control. That's why consistency is never built overnight. It's built through thousands of small moments where you either follow your rules or betray them. Most people think discipline feels powerful immediately. It doesn't. In the beginning, discipline feels uncomfortable, restrictive, boring even. Your emotions fight it constantly because your brain has become addicted to stimulation. It wants movement, action, dopamine. So when you finally try slowing down and waiting properly, you almost feel restless inside your own body. You begin noticing how deeply conditioned you were to react emotionally. But if you stay with that discomfort long enough, something incredible starts happening. Your mind becomes quieter, cleaner. You stop panicking every time price moves quickly. You stop needing to constantly predict what happens next.
That's when selectivity starts forming naturally. You no longer feel the need to trade constantly because you can finally distinguish movement from meaningful opportunity. And meaningful opportunity is rare, much rarer than beginners believe. Most of the market is just noise, designed to emotionally exhaust impatient people. That's why professionals often look inactive from the outside. They are not emotionally reacting to noise anymore. They are waiting for alignment, real alignment, structure, volume, momentum, confirmation, clarity. Not emotional excitement, clarity. There's a huge difference between those two things. Excitement screams. Clarity feels quiet. Excitement rushes you. Clarity waits. Excitement says enter now before it's too late. Clarity says if it's truly high probability, another opportunity will always come. Emotional traders never believe that. They secretly think every missed move is catastrophic, so they chase endlessly. But mature traders understand the market will still be here tomorrow, next week, next month. There will always be another setup, another breakout, another trend, another opportunity. That understanding removes enormous emotional pressure because now your mindset changes from scarcity to patience. You stop trading like someone desperately trying to survive. You start trading like someone waiting for conditions to become favorable. And ironically, that patience is exactly what creates longevity. Most traders don't fail because they lack talent. They fail because they emotionally burn themselves out before consistency ever arrives. The constant stress, the overtrading, the emotional swings, the obsession with outcomes. Eventually it becomes too.
There's a stage in trading where something very strange begins happening. You stop caring about being right all the time. And honestly, that shift feels almost impossible when you're still emotionally attached to outcomes. Because in the beginning, every trader secretly believes winning means predicting correctly. They think successful traders are people who always know where price is going next. So naturally, every losing trade feels like failure, a personal mistake, proof that they're not good enough yet. But after enough experience, you begin understanding that trading was never about perfect prediction. It's about probability. And probability means uncertainty never disappears completely. Even the cleanest setup in the world can fail. Even perfect structure can break unexpectedly. That realization changes how mature traders think. They stop asking, will this trade definitely work? And start asking, does this trade statistically make sense according to my plan? That small difference removes enormous emotional pressure because now the goal is no longer perfection. The goal becomes consistency, consistently following rules, consistently managing risk, consistently protecting capital, consistently waiting for quality instead of forcing action. And consistency is much less emotional than prediction. Prediction feeds the ego. Consistency builds stability. Beginners are obsessed with being right. Professionals are obsessed with executing correctly. That's why experienced traders can take losses calmly, while beginners emotionally spiral after one bad trade. The professional understands losses are already included in the game. They don't interpret losses emotionally, they interpret them statistically. But emotional traders attach meaning to every outcome. A winning trade makes them feel smart. A losing trade makes them feel broken. Their confidence constantly rises and falls based on short-term results, and that creates emotional instability. One green day makes them overconfident. One red day destroys their discipline. They become emotionally reactive because internally they still believe trading is about proving themselves. But the market has no interest in validating anyone's ego. In fact, ego is one of the most expensive things a trader can carry. Ego makes traders hold losing positions too long because they refuse to admit they're wrong. Ego makes traders revenge trade after losses because they feel the need to win back respect. Ego makes traders oversize positions because they want bigger validation from the market. But the market does not reward emotional pride. It punishes it brutally. That's why humility becomes one of the most valuable traits in trading. Humility allows flexibility. Humility allows patience. Humility allows traders to accept uncertainty without emotionally collapsing. And once you become emotionally comfortable with uncertainty, something powerful happens. Fear starts shrinking. Not because uncertainty disappears, but because you stop resisting it. You stop needing guarantees before acting. You stop demanding certainty from a market that can never provide it. Instead, you focus on process, structure, discipline, preparation. You begin understanding that your edge does not come from knowing the future. It comes from behaving correctly under uncertainty, while most people emotionally self-destruct. That's the real edge. Emotional control. The ability to stay calm while others panic. The ability to wait while others chase. The ability to protect capital while others force action out of desperation. And over time, those small, disciplined decisions compound quietly into something powerful. Not overnight success, not dramatic wealth, but stability, consistency, longevity. The things emotional traders rarely achieve because they burn themselves out chasing excitement instead of mastering themselves first.
The truth is, the market never really changes. Technology changes, charts change, strategies evolve, but human emotions stay exactly the same. Fear, greed, impatience, hope, desperation. Those emotions have moved markets for decades, and they still destroy traders every single day. That's why trading psychology matters so much, because no matter how advanced your strategy becomes, emotions can still sabotage execution in seconds. One impulsive decision can erase weeks of discipline. One emotional reaction can completely change the outcome of a month. And most traders underestimate how fragile discipline actually is. They think discipline means feeling strong all the time. It doesn't. Real discipline usually feels uncomfortable, quiet, invisible. It's choosing not to enter when your emotions desperately want action. It's closing the laptop after a loss instead of trying to recover immediately. It's accepting that sometimes the best trade is no trade at all. Those moments don't feel exciting. They feel frustrating at first. Because emotionally, human beings crave certainty and movement. We want proof that we're progressing. We want to feel involved. But trading punishes emotional involvement. The more emotionally attached you become, the more unstable your decisions become. That's why many traders slowly realize the market is less about intelligence and more about emotional endurance. Can you remain patient long enough? Can you stay disciplined after losses? Can you avoid overconfidence after wins? Can you survive boredom without creating unnecessary risk? Those questions matter far more than most technical knowledge, because emotional mistakes repeat endlessly until they're consciously corrected. The market keeps exposing the same weaknesses again and again until the trader finally changes internally. That's why some traders stay stuck for years despite learning more strategies. The issue was never information. The issue was behavior. You can give two traders the exact same system and get completely different results because psychology changes execution. One trader follows the rules calmly. The other breaks them emotionally the moment pressure appears. Same strategy, different mindsets, completely different outcomes. That's why emotional mastery becomes the real foundation of consistency. And emotional mastery does not mean becoming emotionless. It means learning how to act correctly even while emotions exist. Fear will still appear sometimes. Doubt will still appear. Frustration will still appear. But mature traders no longer obey every emotion they feel. That's the difference. Beginners react emotionally. Professionals observe emotions without automatically acting on them. That skill changes everything because it creates space between feeling and behavior. Suddenly, emotions stop controlling decisions. A trader can feel fear and still follow the plan, feel excitement and still wait for confirmation, feel frustration and still avoid revenge trading. That level of self-control is what eventually creates confidence. Not fake confidence based on hype or motivation, but quiet confidence built from repeated, disciplined behavior. Confidence that comes from knowing you can trust yourself under pressure. And honestly, self-trust is one of the most important things a trader can develop. Because without self-trust, every trade becomes emotionally exhausting. You hesitate, second-guess yourself, panic during pullbacks, exit early, enter late. Your mind becomes chaotic because internally you no longer believe in your own execution. But disciplined repetition slowly rebuilds that trust. Every time you follow your process correctly, even after losses, your mind becomes more stable,
more grounded, less reactive. And eventually, trading stops feeling like emotional warfare every single day. The market becomes quieter internally. You stop treating every candle like an emergency. You stop needing every trade to prove something about you. You stop chasing constant stimulation. Instead, you begin operating with patience, structure, and emotional balance. And that's the point where many traders finally realize something surprising. The goal was never to conquer the market. The real goal was learning how to conquer themselves.
And maybe that's the deepest irony of trading. People enter the market thinking they're trying to build wealth, but somewhere along the way, the market starts rebuilding them instead. Slowly, painfully, one mistake at a time, one emotional lesson at a time. Because trading has a way of exposing parts of yourself you didn't even know existed. Your impatience, your ego, your fear of uncertainty, your addiction to control, your need for validation. The market brings all of it to the surface. And at first, most people resist those lessons. They blame strategies. They blame volatility. They blame manipulation. They search endlessly for a better indicator, a better mentor, a better setup. But eventually, if they stay in the game long enough, they realize something uncomfortable. The biggest obstacle was never the market itself. It was the version of themselves reacting emotionally inside the market. That realization changes everything, because now growth becomes internal, not just technical. You stop obsessing over finding perfect entries and start focusing on emotional consistency instead. You begin valuing clarity more than excitement, patience more than activity, stability more than adrenaline. And those shifts slowly transform the way you experience trading altogether. The market stops feeling like a casino pulling you emotionally in every direction. It starts feeling quieter, slower.
Your relationship with uncertainty changed. Your need for constant action faded. And when that happens, opportunities become easier to recognize because your mind is no longer clouded by emotional noise. You stop forcing trades out of boredom. You stop chasing moves out of fear. You stop treating random movement like meaningful opportunity. Instead, you wait, calmly, patiently, confident that if this setup isn't yours, another one eventually will be. That mindset creates freedom. Freedom from desperation. Freedom from emotional urgency. Freedom from the exhausting cycle of constantly needing something from the market. And ironically, that freedom is often when traders finally begin performing better consistently. Because now they are no longer trading emotionally for validation. They are trading objectively from preparation. There's a huge difference between those two states. One is driven by emotional need. The other is driven by structure. Emotional need creates chaos. Structure creates calm execution. And calm execution is where consistency lives. Not in excitement, not in prediction, not in constantly trying to hit home runs. Real consistency is usually quiet, controlled, disciplined. It's built through hundreds of small, correct decisions repeated over time. The decision to wait, the decision to skip weak setups, the decision to respect risk, the decision to walk away after emotional days. One of the most dangerous moments in a trader's journey is not after a loss. It's after a big win. Because losses usually make traders cautious, but big wins can make them careless. A powerful winning streak creates a feeling that is incredibly deceptive: control. Suddenly, the trader starts believing they finally understand the market completely. Confidence slowly turns into overconfidence. Discipline starts loosening. Risk begins increasing. Rules become optional. And without realizing it, the trader slowly shifts from structured execution back into emotional behavior again. That's why the market humbles people so often after periods of success. The moment ego becomes stronger than discipline, danger begins quietly building underneath the surface. And the scary part is that overconfidence rarely feels dangerous in the moment. It feels amazing. You feel smarter, faster, more certain. Every setup looks obvious. Every trade feels easy. But emotionally, that state is extremely unstable because it removes caution. It removes patience. It removes respect for risk. The trader starts acting bigger than the process itself. That's when mistakes begin multiplying again. Oversized positions, emotional entries, ignoring confirmation, holding too long, trading too frequently. It's almost like success temporarily tricks traders into abandoning the exact behaviors that created success in the first place. That's why emotional balance matters during winning periods just as much as losing periods. Mature traders understand this deeply. They know confidence must stay connected to process, not outcomes. Because outcomes fluctuate. Some periods are hot, some are slow. Some months, everything aligns beautifully. Other months feel difficult, even with good execution. That's normal. But traders who emotionally depend on winning become unstable whenever conditions change. They start forcing trades during slow periods because they're trying to recreate emotional highs from previous success. And once again, emotional urgency quietly returns. This is why long-term trading consistency requires emotional detachment from both winning.
And probability only works properly over large samples with disciplined execution. Most traders struggle with this because emotionally they are focused on individual outcomes instead of long-term behavior. They desperately want each trade to matter emotionally. They want every trade to prove something. But professional traders think differently. They understand no single trade defines them. One trade means very little in the bigger picture. What matters is the consistency of decision-making over time. That perspective creates emotional stability because it removes unnecessary pressure from individual moments. Now the trader no longer needs every setup to be perfect. They simply need to execute properly according to their edge. And ironically, removing emotional pressure often improves performance dramatically because pressure creates tension. Tension creates hesitation. Hesitation creates mistakes. But calmness creates clarity. Calmness allows traders to think objectively instead of emotionally. That's why many experienced traders eventually become almost emotionally neutral toward the market. Not because they stopped caring, but because they stopped attaching their identity to short-term outcomes. The market becomes business instead of emotional drama. A good trade loses? Fine. A strong month happens? Fine. Neither changes the process. Neither changes discipline. The focus remains the same. Protect capital. Follow the plan. Wait for quality. Manage risk. Repeat. Simple principles repeated consistently become powerful over time. But emotionally reactive traders constantly abandon simplicity, chasing emotional satisfaction instead. More indicators, more trades, more excitement, more stimulation. Yet the irony is that mastery in trading often looks incredibly simple from the outside. Patience, discipline, risk control, emotional stability. Those principles sound basic, but living them consistently under pressure is what separates surviving traders from emotional gamblers. And the longer you stay in the market, the more you realize that success rarely comes from doing something extraordinary. It usually comes from avoiding unnecessary mistakes long enough for good habits to compound. And in the end, that's what trading really becomes. Not a battle against the market, but a battle against yourself. Against your impatience when nothing is happening. Against your greed when money starts flowing easily. Against your fear when losses begin stacking up. Against that constant inner voice whispering, do something, enter now, don't miss this move. Because the market will tempt you every single day. It will tempt you with movement, with excitement, with the illusion that constant action equals progress. And if you spend enough time in this world, you eventually realize something most people never understand. The market is not designed to reward the most emotional person in the room. It rewards the most disciplined. The one who can stay calm while others panic. The one who can wait while others chase. The one who can sit in silence without needing the market to entertain them every minute. That's the real edge. Not prediction, not intelligence, emotional control. the ability to remain stable inside an environment specifically designed to trigger instability. And once you truly understand that, trading starts changing forever. You stop looking at charts with desperation in your eyes. You stop needing every candle to become an opportunity. You stop treating the market like a machine that must constantly give you validation. Instead, you begin approaching it with patience, respect, clarity. You realize that not trading is often a decision just as powerful as trading. That protecting your mental capital matters as much as protecting your financial capital. That forcing action during weak conditions is not bravery, it's emotional weakness disguised as confidence. And slowly, almost without noticing, you begin transforming into a different kind of trader. Calmer, more selective, more disciplined. You stop reacting emotionally to every move. You stop trying to catch everything. You stop believing you must always be involved. Because now you understand something the market spent years trying to teach you. You do not need every opportunity. You only need the right ones. And the right ones require patience. They require preparation. They require emotional balance strong enough to stay still while the crowd loses its mind chasing noise. That's why the traders who survive this game the longest are usually the quietest. They are not constantly showing off profits. They are not emotionally screaming at every breakout. They are not forcing trades every single session, trying to prove they belong here. They simply wait, observe, prepare. And when the moment finally comes, they execute with clarity because they preserve the one thing most traders destroy too early: themselves, their focus, their confidence, their discipline, their emotional stability. That's the real secret hidden underneath all successful trading. The market rewards those who can protect their minds while everyone else destroys theirs chasing stimulation. And maybe one day, after enough mistakes, enough emotional battles, enough painful lessons, you'll sit in front of the charts and notice something strange. The market is moving wildly, but inside yourself, everything feels calm. No urgency, no panic, no fear of missing out. Just patience, clarity, stillness. And in that moment, you'll realize you finally understand what trading was trying to teach you all along. The greatest skill in this market was never predicting the next move. It was learning how to master yourself first.